Price and NAV as of April 25th was $18.82 and total assets of $904 million.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee talks about stronger than expected earnings for $GRNY stocks and what it means for investors. He breaks it all down. Let's watch him to see what's driving the buzz.
In terms of weekly performance, for the past week, Granny Shots gained 7.8% compared to a 4.6% gain for the S&P 500, and that leads to relative performance of 300 basis points for the week. In terms of relative performance, the top 5 contributors to performance were Palantir, Tesla, MicroStrategy, GE Vernova, and Netflix. The bottom 5 contributors to performance were S&P Global, Bank of New York, Progressive Corp, Abbott Labs, and Costco. We're in the middle of earnings season for Q1 2025. Now, this is the earnings season ending March, so it's not going to yet reflect the impact from tariffs. But so far, 19 of the 35 Granny Shot stocks have reported results, as this table shows. And the numbers have been relatively positive. 79% of the companies are beating on both earnings and revenue. And in price performance, whether it's 1 day or 5 day, 81% are beating the S&P 1 day on the day they report, which is what you want to see. And 1 week later, 75% are outperforming. These are good stats, and it shows you that the fundamentals remain attractive for the Granny Shot stocks. Now, let's look at earnings for this particular week, the week of April 25th. There are a lot of companies that are reporting, and some yet to report for the week. We're highlighting the 13 Granny Shots reporting this week. And as you can see, it's quite a lot. For Wednesday after the close, there are 2 names that I want to highlight, Microsoft and Meta, because they're part of the Mag 7. And as you can see, after they report results, their stocks are up very strongly. In terms of theme performance, leading Granny is energy and cybersecurity, which continues to be led by Palantir and GE Vernova, but CrowdStrike, and these are all relative performance, are all contributing. The second best performing strategy is Style Tilt, which is it's done quarterly, but again, it's led by names like Palantir, MicroStrategy, GE Vernova.
Bitcoin enters the first full week of May with major events on the horizon and critical price levels in focus. After dipping to $93,350 over the weekend, BTC rebounded quickly, holding near its yearly open around $93,500. This support level is now seen as vital to maintaining bullish momentum, especially as markets prepare for the U.S. Federal Reserve's interest rate decision on May 7. Traders expect Fed Chair Jerome Powell's tone, not just the rate outcome, to move markets dramatically, especially with rising recession fears and inflationary pressures lurking. While price action has been choppy, some traders are eyeing a push toward $98,000, where liquidity could trigger further upside. Others warn that if Bitcoin loses support, a drop to $91,500 or lower could be next. Meanwhile, Bitcoin's dominance over the crypto market has surged to 65%, its highest in 4 years. Analysts like Rec Capital suggest we could be near the end of this dominance wave, predicting a potential collapse once BTC reaches 71%. This could spark a long-awaited altcoin rally. Sentiment is also shifting fast. After weeks of cautious optimism, social media buzz around higher Bitcoin targets is growing. With ETF inflows rising and market watchers glued to the Fed, this week could be a major turning point for Bitcoin and the wider crypto market.
And the third is global labor suppliers. Now, that may not be a surprise to you, but of course, we are dealing with a lot of tariff uncertainty. But as you can see, the stocks that are related to helping U.S. gain productivity are outperforming. Now, last week, we talked about how we saw 5 potential signs that confirm the market made its low. And the fifth one we were waiting for was for the S&P to retrace 50% of its losses or close above 54.91. But that did happen on April 25th. So I do think that we now have a constellation of factors here telling us the market made its structural low and the probable low for 2025. I think we've got some evidence of that in this week's macro results. On Wednesday, there was 3 economic reports that were critical: employment cost index, first quarter GDP, and March core PCE inflation. But exhibit A of a bottom is the GDP for first quarter. It was a negative GDP number, the worst GDP growth since first quarter 2022. But before you start to think the economy has slipped into a recession, keep in mind that the reason GDP was negative in the first quarter was that the US had a huge surge in imports. Companies were ordering a lot of imports. Now, imports subtract from GDP because they're made from somewhere else. So, as we bring it in, it's actually subtracting from GDP. But we pulled in a lot of imports, but inventories, which is what would show up here, didn't rise as much. So it's like a mystery. What happened? We imported a lot of stuff, but didn't show up in inventory. Part of this is because inventory goes into this mysterious place called the bonded warehouse, which some people have talked about. And this is from Craig Fuller talking about ships at sea. And bonded warehouses store goods without paying tariffs. Actually, bonded warehouses were actually first mentioned in a movie called Tenet. I don't know if you saw it. It came out during COVID. But part of the plot line is that there are goods kept in airport warehouses, so you're not paying duties or taxes. And these are bonded warehouses. And of course, in that movie, they were breaking into the airport to steal some critical items. But with negative GDP in the first quarter, I think it's pretty well socialized, meaning people knew about it. But the rest of 2025 is going to be quite messy because you'll get a rebound in second quarter GDP, but then Q3 and Q4 GDP this year have a lot of tariff distortions. But I think that's the thing. The market's going to focus on 2026 and whether or not tariff policies are going to lead to upside to growth next year. If you look at Polymarket, they're pretty skeptical. They're putting a 65% chance of a recession in 2025. But I actually think that's overly pessimistic, and it's not too late to reverse this as long as we get some tariff clarity. And the stock market is really, I think, evidence that a lot of bad news is priced in. GDP was reported Wednesday morning. The stock market opened down 2.5%, but look at what happened over the course of Wednesday. We had a nice recovery into the afternoon and a huge rise into the close. And of course, the question is, why are people buying stocks on a day when you had bad GDP? Well, part of it is maybe because of April month end, CTAs do algorithmic buying. The second is, and I believe this is true, at sentiment so bad that bad news is priced in. I mean, that's, I think, another example of a washed out stock.
Michael Saylor's company, Strategy, just made another massive move in the Bitcoin market. Between April 28 and May 4, the firm purchased 1,895 more Bitcoin for about $180 million, bringing its total holdings to an astonishing 555,450 BTC, at an average price of $95,167 per coin. Strategy's total investment now stands at around $38.08 billion. With Bitcoin currently trading near $94,000, the company is sitting on an unrealized gain of roughly $14.2 billion, owning over 2.6% of the entire Bitcoin supply. The purchase was funded through the sale of both common and preferred stock, raising over $180 million. This move is part of Strategy's ambitious 21-21 plan, which aimed to raise $42 billion for Bitcoin acquisitions. With that plan's MSTR stock capacity now fully deployed, the firm has launched the new 42-40 plan, targeting another $42 billion, split equally between equity and debt, to keep building its Bitcoin treasury through 2027. Despite posting a $4.2 billion net loss last quarter, largely due to unrealized losses under new fair value rules, analysts remain confident in Strategy's bold Bitcoin-first strategy. As traditional finance giants like Cantor Fitzgerald and SoftBank ramp up crypto efforts, Strategy's head start and aggressive buying make it a standout player in the institutional adoption of Bitcoin. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.